Good morning, traders, and welcome to Premarket Info. I'm Dennis Dick.
And I'm Joel Elconin.
Well, on today's show, this market has been consolidating. We're seeing major consolidation on a lot of your Big Ten and your overall market. But where are we heading?
This
The disaster of the day, Monster, MNST, Monster Beverage. These high multiple stocks, when they miss earnings, they always get punished. We've got retailers reporting. Dillard's and Kohl's will discuss their reports. ExxonMobil finally takes out that 88 level that we have been talking about on the show, it seems like for years. Surprisingly takes it out right before the ex-dividend date, so not so surprisingly. And we're seeing deja vu in Eli Lilly.
this market is just winding itself into a tizzy here.
It,
And for what a tizzy is like, this thing's ready to do something. Had a 10-point range yesterday, 15-point range the day before. Unreal consolidation, not only in the SPOOs, but in several stocks.
it's really consolidating here. You look like stocks like even General Electric over the last few days. You look at stocks like Johnson and Johnson over the last few days. I mean, what was Johnson and Johnson's range yesterday?
30 cents.
30 cents. Like we're talking about stocks that have been bouncing around 70, 80. We've had volatility. Not this week, man. The volatility is muted here. We are winding up for something. I tend to think we're still going to make a break for those highs, but who knows? We've had 3 days, really 4 days of extreme consolidation here, where on this lower end of the range, the S&P's trade down at 1387. The upper end of the range, we've got up to about 1402, 1403. So really, really consolidating.
Yeah, we hit 1403.75 in the pre-market. That's 50 cents above the recent high of the move at 1403 and a quarter. That's where the sellers are lining up. That's an area, if we get any kind of pop today, keep an eye on that. Coming back on the downside, Globex low 1393.75. Yesterday's low 1390.50. Of course, we've been talking about that 1387 and a quarter level. We are going to get a move here. We are going to break down below 1387 or break above this 1403. I guarantee it today.
You guarantee it today? Guarantees. I don't know. I don't know if we can ever guarantee anything, but
Put
13.
that disclaimer back up
Put
there.
that disclaimer back up there. I don't know the
Also,
way it's been. I'm
adding to the
almost saying
type.
channelingstocks.com, channelthemarket.com. Lower end of the range is 1387 to 1390 area. The upper end's been this 1403, or maybe you continue to play that until it doesn't work anymore, because we've seen extreme consolidation, but this is getting ridiculous. It's 4 days where we've really gone nowhere here. So very interesting setup here. We're definitely winding up, and it could be a big move one of these days.
Look at Apple, too. I mean, look at the last 3 days ranges in Apple. I mean,
Wow.
that's scary. I mean, I'm going to go put a strangle on right now. I mean, this thing got to move above 625 or break down below 617. The reason it's down a little bit today, they went ex-dividend.
Yeah, went ex-dividend for $2.65. So you do have those players that come in before trying to capture the dividend. It's trading down now just a little bit. Actually, its adjusted close would be, doing the quick math, 617.21. So I know it says it closed 619.86, but you got to adjust it for the dividend. So the adjusted close is down at 617.21. So we're actually only down 46 cents on Apple, which puts it about in line with the market. But you're right. This consolidation in Apple, too, is amazing. Do have a
Okay.
lot of other stocks here to talk about today, though, and one that I want to highlight is Monster Beverage, MNST. Believe it or not, the stock is actually bouncing back. It reported a terrible, well, not a terrible quarter, but it missed by 2 cents. And when these stocks miss, they usually get punished, but they absolutely murdered this stock last night after hours. How low did that stock get?
We got to 53.70 in the pre-market.
Wow, 53.70. And you know what? I tweeted out that these stocks usually don't bounce back. That makes me out to definitely be wrong on this, because this stock has bounced back. It's trading at 64 $8 now. So this thing has bounced back nicely from that 53 area last night. The washout traders that were throwing this out. Unbelievable rally to rally $10 after going down that far. So when you see this, oh, it's having a bad day, it's down $3. Actually, it's not having that bad of a day because it was having a bad night, and today it's having a pretty good day.
Yeah, all things considered, after hitting that 53.70 level, we have popped up to 65 in the pre-market. I would keep a real close eye on that 65 level since that capped an 11-point rally. This stock has always been, the subject of a lot of rumors, being taken over by Coca-Cola. Back in April, you had a nice rally in it. I've had the sell-off here. You could have said 61.72. That was low on July 23rd. I would use that as a minor support point. Also, a lot of consolidation at the 61 area overnight. So 61, good swing number for Monster
But
Beverage.
remember that it traded down so many levels there last night too. So I don't know if I'd be a buyer down there in that 61 area just because it traded so low last night. It could just open up like a vacuum and start taking out levels. Scary, but it's good for the shares that obviously it has bounced back here because a lot of times you see these big companies with or these high PE companies report and they don't bounce back because remember like you're talking about Chipotle there even yesterday how it had that huge gap down after they reported CMG and then just kept drifting down afterwards. And you've also seen stocks like GMCR in the past that had these big multiples too, and they've gapped down and have really struggled to come back as well. So a lot of times these stocks, these high multiple stocks gap down, they don't come back. Monster it has come back from its low though, but I'm still skeptical of this rally. Lots of other ones here reporting here too. We've got a couple retailers. Dillard's is one, DDS, that reported earnings. Man, this company just keeps beating and beating and beating. 70. The numbers are 63 cents against estimates of 46. So they absolutely killed it. There's no trades this morning, but last night this thing was trading up into the 74.86 area, and I don't know. I think it might have even got higher than that. But here's a company. I've been in these stores before. These are absolutely huge stores. They're huge. Obviously, it's a retailer, but they sell everything. They're just huge stores. I never see a lot of people buying anything in there. So I was always like, man, I don't know if this store with all these overhead costs is going to make it. But they just keep coming out and they just keep beating the numbers.
Yeah, we've nicked 75.11 in the pre-market. Not a ton of volume associated with this move. Spotty trades. Looking at the volume in this thing, it's not real big. Yesterday, someone must have had an inkling that there was going to be something coming out because it traded over 1 million shares when averaging around 50 or 60,000. I'd keep an eye on the pre-market high here, 75.11. If I was on this stock overnight, being up $4.50 on this little volume, it would be tempting to take some profits on it, blowing away the old 52-week high and actually all-time high at 72.46. So that will serve as a minor support.
But I just don't, like I was saying, I just don't get how this company continues to come out and just beat the numbers. So obviously, what I see if I go in those stores isn't what's happening. I must just be going on their off days. But something I wanted to talk about, just not to go on too tangent, but you went and wrote an article on Best Buy for Seeking Alpha there yesterday, and you were very skeptical on Best Buy's whole business model anymore because they do have those big stores, they do have those huge overhead expenses, and if you look at some of the online tech or electronics retailers, they don't have those overhead expenses. So you were challenging whether or not Best Buy can compete with these online electronics dealers.
Yeah, and Dillard's is throwing some egg on
That's
my
what I'm
face.
saying here. I'm just trying to highlight that. Hey, you got one big box retailer that can actually. I know now Dillard sells a little bit of everything. They sell clothes. Like people don't usually buy clothes online. They want to actually go and try on the clothes. But a lot of people do buy electronics online. And I kind of tend to agree with your article on the Best Buy to a certain extent that when I go in Best Buy, you do see a lot of people in the stores, but you never see a lot of people buying either. But and I think obviously we've known Best Buy has had some problems for a while. I don't know if I see them, going the Circuit City route or anything. I mean, you got to go. Some people, there's still people that like to go into physical stores to purchase stuff.
Yeah, but everyone's looking to save a nickel And that when it comes down to it, if someone can go into the store and identify something with this Amazon price checker or whatever, needless to say, I mean those stores are just too big. I don't know what their sales per square foot are, but it can't be very good. And if you're a retailer, you got to have that sales per square foot way up there in order to support those big stores. But I've never been into Dillard, so perhaps that's throwing a little water on my theory. But Best Buy, I'm sticking to it.
Kohl's reported earnings here this morning. They actually beat on the bottom line. They made a buck against estimates of 96 cents, but they are lowering their full year guidance down to 450 to 465. It was up at 475 before, so that's got Kohl's trading down a buck here. Here's an interesting chart. This whole 52 area really looks toppy. If you go back to late April, we topped out just above 52. The last couple days, we've topped out just above 52. This thing putting a top?
I would take a look at this 51 level here. That looks like that was the low. 51.19 was a low 3 days ago, August 7th. Currently trading right around that level in the pre-market. We did hit 51. We're getting a slight bounce, but boy, this move up for 47 and change up to over 52. Now you get a little negative news. Take out this 51 level. You could easily see the low 50s in this stock today.
One I want to talk about too here is Cisco. It's getting two upgrades today, one from Piper Jaffray and one from the big gun, Goldman Sachs. 1775 Cisco's trading at after closing at 1716. So Cisco starting to get back up into the upper end of this range. These highs that we seen back in June, we're trading right there right now, actually above the high that we set on June the 20th at 1763. We're up at 1776. I remember Goldman upgrading this, I think about 6 months ago or something. I'm upgrading it again, so they must really like Cisco. They're giving it another upgrade here again. What's your take here?
Well, you have a high here at 1763 on June 20th. You've traded up to a little bit over that in the pre-market. You've traded to 1782. Trying to get in this whole gap area. I mean, this is a big move for the stock overnight. Some volume associated with it, not a ton. So keep an eye on the pre-market high of 1782. That coincides, like I said, with the high that we had back in June. It's 1763. Above that, you're really getting into this whole gap area up to 1850. So you really have no good reference points after that level.
ExxonMobil finally took out that 88 level. We have been talking about this level forever on the show. Obviously, 2011 we went back and we were talking about the highs of 88.23, that whole area. We're still kind of in this area here, but is this stock set for a breakout? It's kind of also, I wanted to mention, it did go ex-dividend here today, so you have to adjust your close. It says it closed yesterday at 88.28. It just gave a 57-cent dividend, so doing the quick math in my head, that would put it at 87.71, the adjusted close.
Ooh.
So it's trading right there right now. But here's a stock that is breaking out, but interesting enough, whenever these stocks move up, they seem to find more institutional sellers. I'm seeing some significant size up in the 88.5 area. So there looks like there seems to be some more sellers, and probably those high frequency guys will sit in front of that size at 88.50. They'll probably be sitting there 88.40 to 88.49. So I'll give you some high frequency resistance levels on this one. It's 88.40 to 88.49.
Wow, man. Taking this thing home overnight just to capture that dividend with it trading at this level, to me, seems like a risky proposition. And here we are back at 87.71. If it holds as 87.70, 87.68, double bottom there from the two previous days. So it's still support, even though I know you're talking about the ex-dividend, whatever. Big level here. I think if it can hold this off the open, it can migrate back up to the $88 level. I don't think there's any way in HELL that we're going to get back up to $88.50 today. People that took this home for the dividend are going to be scrambling to get out of this. If you break through this 87.70 level, Minor support at 87.37, but I could see us right back at 86.60 in a heartbeat.
Eli Lilly. I'm having deja vu here because here's what happened with Lilly. Obviously, a month ago, we had the whole Pfizer, Elon slash Johnson and Johnson Alzheimer's drug having problems with one of their trials. Lilly has a competing drug similar. They got nervous. They sold Lilly off on that news. Then Lilly reported earnings, and the stock spikes all the way back up into this whole 44 area. Now, 2 days ago, we know the whole Lilly, Elon, Pfizer, they've actually stopped doing trials on their Alzheimer's drug, and Lilly sells off again in sympathy with that move. What happens today? Lilly comes out and actually revises their guidance. And what happens in the pre-market? The stock spikes up, and where does it go to, Joel? What's the high here in Lilly?
It got over $44,
Right
44,
again!
yeah, 44.15, but boy, it put the
It
brakes on
did.
there.
Yeah. So if you were quick on that, I guess this morning in the pre-market and knowing that every time this thing gets above 44 it finds sellers, it found them in a hurry and it basically sold straight back off just in a 20-minute period, and it's trading back down now at 43.19. So it is looking like it's going to open up on the day, but not nearly as nice as it looked right after they came out with that news release at 8 o'clock this morning when it spiked over 44.
Yeah, you hit the 44.15 level, and that just magically coincides with the 44.13 high on August 6th, and then the 44.20 high on August 3rd. So that is major resistance there. Above that, you have the high of the move here at 44.53. But I expect after that kind of pop and then a drop, I think the sellers are going to be lining up at $44 to exit Lilly.
I mean, we always talk about these highs and lows from previous days, and they do come into play. I don't know how you can't say. And a lot of people don't consider this information. A lot of people make it challenging too. They'll do, all the moving averages. It's crossing this moving average, it's crossing that. Fibonacci's. They do all this other fun stuff with the numbers. But we always try to keep it simple here on the show because trading is more simple. It's the fact that you've just got sellers, you've probably got institutions up here that have marked this area, this 44, and they don't want to own the stock up there, and they continue to come in and sell the stock in that area. But when you start to break stocks down and look at moving averages, crossing this moving average, that stuff, I've been trading prop for 13 years in proprietary trading firm, Bright Trading, and every time I see somebody coming in and making it complicated and putting in your fibs and putting in the moving averages, those traders usually don't survive. And I'm not saying that doesn't work. Maybe it works for some traders. It has never worked for me. I know Joel is not a big fan of all that extra analysis either. And I think if you keep it simple, you'll have a better chance of staying alive in this game. When you try to break down the numbers and make formulas and do different calculations with the numbers, I think it gets too complicated. And I think for me, that stuff's never worked.
Yeah, I mean, when it comes to retracements and stuff, I do like the 50% retracement. A lot of times that, to see the validate a move or you get a retracement. I like it better, though, like when it coincides with another number. But there's our 30-second spiel on technical analysis.
Keep it simple. The KISS method. Support, resistance, and trends. Take your purple crayon, like Jeff Mack used to say, and draw your line on the chart and buy it when it gets down to the upper end of the trend. But going back to the market, talking about trends, obviously this 1387, we've drawn a couple of lines here for you on the chart to keep it simple. This 1387 area has been support for the S&P, and this 1413 area, that was the double top we set back in March. I still think it might eventually try to march there, but we may it may not get there today with this muted activity. Maybe we're going to be in this range for a while.
Oh, we just can't stay in this range forever. I mean, maybe, give it today, give it tomorrow, give it another couple days. But when you're averaging, 20 to 22 points average daily range in the S&Ps, and then you have a day of a 13-point range and a day of a 10-point range, I mean, the math it works out that we're going to have a move off these levels, and we've given you the major support and major resistance to follow. That's our show for today, folks, and we'll be back with you tomorrow.